Welcome back. You're with us on Bazaar Morning Call, and as we've been telling you, cues across global markets have turned a little challenging because of the slide that we're seeing on Wall Street futures. And most of the Asian markets are also in the red. Hong Kong down about 2% now. Japan's down about 1% or so. Let's pull up the implied open. The last time we checked, it was suggesting that we'll start probably 60 to 65 points lower. Yeah, still around that level, 53 points, actually a little better off. So let's see. Promises to be slightly more volatile than yesterday, at least at the start. Now, what about individual stocks? Well, let's straight away get to our team, which is standing by with the CNBC-TV18 list of top stocks to watch for the day. Guys, morning to all of you. Ritu, let's kick it off with IndusInd Bank. So this external committee has finally, given its sense on the derivative discrepancies. What's the latest?
Well, yes, Surabhi, good morning. IndusInd Bank has finally received that PwC report on discrepancies, and that pegs the hit at 1979 crores, which is actually slightly below street estimates, and we understand broadly in line with RBI's initial assessment as well. And the bank has now revised the impact to 2.27% of its December net worth post-tax and will reflect it in its FY25 financials. So no ugly surprises on that front, which is positive. But the concern is the delay in disclosure and accounting discrepancies that may have larger consequences, because we understand at least 3 senior level exits are likely, including the CEO and the deputy CEO who oversaw global markets, including the derivatives portfolio. Now, the RBI, we understand, has also asked the board to submit the shortlisted CEO names 4 to 6 months before Katpalia's term end next year. IndusInd Bank, however, has denied receiving any such communication or any management shakeup.
Okay, all right. Thanks a lot for that, Ritu. Well, let's hop across to Yash. He's tracking ICICI Pru as well as ICICI Lombard. Yash?
Well, Nigel, good morning. So I'm going with green as far as ICICI Prudential is concerned, and that is because there has been a very strong beat and improvement which has come on the margin front, though on one hand the growth has been a little bit slow. So new business premium, that grew at 14%, coming in at about 7,444 crore rupees. Total APE was down 3%, retail APE was down 2%. This is the slow growth on the top line that I'm talking about. Value of new business grew by about 2%, and margins, as I said, a strong beat and improvement coming there. Up 120 basis points at 22.7% versus 21.5%. Street was anticipating a number of 21.8%. It's managed to beat that also with that number of 22.7%. Also, the stock is down 14% in the last 3 months. Because of these two reasons, I'm going with green on ICICI Prudential Life Insurance. ICICI Lombard, again, I'm going green, and that is because the strong, performance which has come overall in their earnings. As far as net earned premium is concerned, that grew by 20%. Underwriting loss was down 11% at 210 crore rupees. Operating profit, that was down 26%. That was largely because the investment income saw a contraction in the quarter. Nothing apart from that. Combined ratio was up just about 20 basis points at 102.5 versus 102.3. So no major damage being done on the combined ratio level also, and the protection continues there. Hence, I'm going with green as far as ICICI Lombard is concerned.
All right. Actually, we have the management coming up at 9:50. You'll hear from the Yash. Thank you for that. The management, Gopal Balachandran, will be with us to talk about those numbers that Yash pointed out. So, conversation a little later. IGL, MGL and Adani Total are in focus as well. Sud is here with details. Good morning.
Morning, Prashant. So first, APM gas price increase and now the APM gas allocation cut. While the APM gas price increase announced on 1st of April was as expected, but this allocation cut has come as a surprise. Government has announced that APM gas, that is administered price mechanism gas, allocation has been cut by 18%, and now total allocation would reduce to 40% from the current level of 51%. Remember, in the last 1 year, the reduction has been almost at 50%. If you remember, in 2024, in the beginning of 2024, the allocation used to be around 80%. Now it's going to be 40%. What do these companies say? Companies say that this allocation cut will have an adverse impact on profitability, and that's the reason I'm going with red for all the 3 companies.
Okay, all right. Got that, Sudarshan. So we'll keep all of these stocks on our radar as well. IREDA reported numbers yesterday. Let's go back to Abhishek to figure out how they were. Abhishek.
Well, IREDA reported a good set of numbers in Q4 FY25, but we need to watch out for their exposure in Gensol Engineering, which will be in the minds of investors in trade today. So disbursements are up 0.5% YOY, but they are up 73.6% sequentially. The AUM growth is healthy at about 27.8% YOY and about 10.5% sequentially. So the yield has actually worked very well for them. They have got higher yields in this quarter, which has helped the NII growth at about 57.3% YOY and about 22% on a sequential basis. So provisions are up 24.5% quarter on quarter, but they have reported strong bottom line growth of about 49% YOY and about 18% sequentially. The spreads have improved. So for FY25, the spreads are at 2.42% versus 2.16% on a year-on-year basis and about 2.28% that they recorded in Q3 FY25. Their asset quality also improved. Gross NPA ratio is down to 2.45% versus 2.68% in the previous quarter. So based on numbers, the numbers look really good, but sentiments that will weigh on investors' mind is the exposure that they have to Gensol Engineering. Back to you.
Okay, all right. Thanks a lot for that, Abhishek. Well, let's hop across to Sudarshan. He's here to tell us about Oil India and Vedanta. Sud?
So in the latest round of auction that has been done under open acreage licensing policy, Vedanta's Kane Oil and Gas has received total 7 new blocks and Oil India has secured 9 blocks. For Kane India, new blocks comprise of 4 onshore and 3 shallow water in Saurashtra and Mumbai, and with this, Kane's portfolio increases to total 69 blocks. For Oil India, 6 blocks secured as sole operator and 3 has come in as consortium partner, and with this, Oil India's total exploration acreage increases to 1.1 lakh square kilometer, and that is an increase of almost 85% if you compare against the same level of last year. So it's going to be positive for both these companies, Vedanta and Oil India.
All right, so thank you very much for that. I mean, the other story, of course, which I guess was really dominating headlines last evening was the story of Gensol. Absolutely shocking details coming through in that SEBI order. Yash is here to quickly recap some of the findings. Yash, take it away.
Well, Prashant, the stock's already seen a damage of as much as 90% in the last 1 year. SEBI's come out with an interim order yesterday. Though it's an interim order, but the allegations which have been made and the explanation of the allegation pretty serious at this point of time. Just to summarize the allegation, misutilization and diversion of funds of Gensol in a fraudulent manner by the promoters of the company. The promoters of Gensol benefiting from these diverted funds out of the company and misleading market regulators, SEBI, the credit rating agencies, lenders and investors, all through this entire process of doing all these violations. As far as the order is concerned, what SEBI said is that Anmol Singh Jaggi and Puneet Singh Jaggi, the 2 promoters of the company, will be restrained from holding any position of a director or KMP in Gensol Engineering. Gensol Engineering, Anmol Singh Jaggi and Puneet Singh Jaggi will be restrained from buying, selling or trading in securities directly or indirectly. Also, market regulator will appoint a forensic audit committee which will conduct this forensic audit, and the report will be submitted within 6 months of this committee being appointed. Importantly, a stock split was also announced very recently as far as Gensol is concerned. That will be put on hold immediately.
Okay, all right, got it. So, yeah, not such great news and pretty, scathing observations and comments coming in that SEBI order. Thank you for that, Yash. Let's quickly recap our list of stocks to watch. The ones that have positive news flow around them are ICICI Pru Life Insurance, ICICI Lombard, IREDA, Oil India and Vedanta. Stocks with negative news flow around them would be IGL, MGL, Adani, Total Gas and Gensol Engineering. All right, that's the stock list. Let's go across to Manisha Gupta with the latest commodity market action. Manisha, good morning.
Morning, and thank you for that, Suvi. Well, the safe haven buying clearly continuing in case of gold, with the dollar index now trading below 100. Gold continues to see further gains here. We are trading at an all-time highs yet again, above $3,275 an ounce at this point in time. There is strong buying, whether it's by ETFs or from the central banks as well, and that clearly has been supportive. So while gold continues to do very well, the other commodities not so well in the Asian markets right now. You have the crude oil prices, which have slipped yet again to near 4-year lows. The metal prices after those initial gains also seem to be now consolidating, and some marginal losses as well. Copper, aluminum, 0.25% on a weaker side at this point in time, as the markets continue to deal with a lot of uncertainty when it comes to the tariffs there. I also want to talk about rubber, which is also trading lower. It's down 4% on a week. And the biggest of declines, when you look at industrial agriculture commodities, that clearly comes in from sugar. That one is trading at a 30-month low. Sugar prices have declined by 12% in last 1 month. So apart from gold, everything else in a bit of a profit taking.
Okay, all right. Got that, Manisha. Thanks very much. We'll take a very quick break on that note. On the other side, we'll connect with Adrian Moat, who's an investor at Hong Kong SAR and an expert in emerging markets, to talk about the volatility and how to navigate it.